Today, I'm joined by Henry Abenaim, founder and CEO of FUNDINGO, the Salesforce-native loan management platform powering over 180 alternative lenders across business lending, private real estate, and the community development financial institution community. Henry's also got a book on the way called Augmented Lending: How AI Augments Human Judgment in the Lending Industry Rather Than Replacing It. Henry, welcome to the show.
Thank you. Great to be here. Thanks for having me.
Yeah, we'd love to start off with your origin story and the early days of FUNDINGO.
So yeah, absolutely. Just to give you some background, I started in the alternative lending space back in 2007. And just to take a step back, alternative lending was really growing rapidly at the time. When I say alternative lending, I'm referring to any lending company that is not a bank that takes deposits, a bank or credit union. Typically, they're private lenders like small business loans, merchant cash advance, invoice factoring, or private real estate lending. And they're really doing it as a private institution, getting money from different funds or credit facilities, and then dispersing it to the borrowers through a private means. And that method of lending was growing tremendously in early 2000s and continues to grow till today. I joined a startup in Los Angeles. It was my first job out of college after getting married, and was ready to roll up my sleeves and work hard. And I did that. And during that experience, as we grew, we started feeling the pain of not having a proper system in place. And what was happening in the industry is all the traditional bank lenders have these big systems that would manage everything, while the non-bank lending was really working off of spreadsheets or repurposing tools from the mortgage industry. And as you can imagine, that's very hard when you're dealing with a high volume of loans. And I remember one day I actually fat-fingered an extra zero on a wire transfer to a bait and fishing shop in Montana, and we never saw a dollar back. I thought I would get fired. I didn't, but it led me to realize that things must be better and something has to change. And our issue wasn't like anyone had bad intentions or bad performing employees. I had the best intentions, but it was just so easy to drop an extra zero in an Excel spreadsheet. And that ended up being a wire transfer. So we implemented Salesforce. At the time, it was the system we chose because you could configure it, and we configured it to meet our needs. And I saw how all of a sudden the workflows of the company, yesterday was manual, today was in a system. Yesterday, we had to manually respond to a broker, giving them a status. Today, that was automatically being shot off in the system. Yesterday, we were putting things in spreadsheets. The next day, we were putting things in a proper database with controls. That really changed my whole perspective on systems.
Okay. So it'd be helpful to share a bit of context also. Most of our audience are SMB business owners, founder operators as well, in that, call it $1 to $30 million revenue run rate. And they might not be as familiar on when to even engage a lender, an alternative lender like you, versus say going the VC route versus maybe just like self-funding their growth. So talk a bit about, when might someone engage you? What is their stage of revenue? What are other financial metrics and growth plans that might make them a good candidate to explore lending opportunities?
Absolutely. So, and just to clarify, FUNDINGO is a loan management software, not a lender, but we work the community of lenders that small businesses should engage with. And when should they engage with them? It's really, it comes a need in the business where you need a bridge from point A to point B, whether that's going into your busy season and you need to buy inventory, whether you're a restaurant and you have such demand and you need to build out a patio or a new pizza oven to support that demand. Usually most small businesses are using the operations capital to be able to fund growth or pay an unexpected tax bill or debt. And that usually, needs to come from an outside source. Yes, you could go to a bank or you could go to, a credit union. However, the requirements for that loan is so high, the collateral you need to show, the time it takes to process that loan, sometimes is too long that you'll miss the opportunity in your business. And oftentimes it's simply a payroll's coming up and your accounts receivable didn't come in on time for that payroll, and you need money within 24, 48 hours. What do? So that's where the
Right.
alternative lenders, the online lenders you could apply and get funding within a few hours very often, because they're going more based on the cash flow of your business than they are
Mhm.
the asset that's collateralizing the loan.
Okay, gotcha. That's helpful. Now, thinking about the product that you are building for these alternative lenders, talk a bit about what led to the growth and any key inflection points. I think a few important points here are, you built this platform on top of Salesforce. And so it sounds like there is a sort of the infrastructure there that's valuable to you, the ecosystem there that's valuable to you. And then we can talk a bit about how you've thought about product adoption as a real differentiator. So talk a bit about, as you're building the product, what's led to these inflection points of growth and adoption.
Great. So I'm glad you asked that, because that actually goes back to, I'd mentioned how I worked in the alternative lending industry myself. But it came a point there where I realized the market had the same problems that we had, and that one lender was really across the industry. And that came to me by going to trade shows and meeting other lenders, and they heard what we built, or they saw it because I would show them like a dashboard of how we manage our originations. And they would say, oh, wow, we need exactly that. We needed that for so long. And I realized that there was a latent demand in the industry for that digital experience and automation. And in 2013, I started a consulting firm to help lenders implement their digital experience. And we grew the team of consultants that helped lenders. We had over 100 lenders over the course of those years that leveraged our services to manage their lending in a more automated fashion. But with that experience, we had that next big inflection point, which is the product. And that is, we realized that we were building and configuring a custom bespoke solution for each lender independently, when they really had a very similar problem to the next. And we were building the same thing over and over for each lender that we could really productize. And if we turn it into a product, we'd be able to deliver far more value than we would if we take the budget of one single lender and build something out for them. So we got some early friends and family money. I mean, it meant a lot back then, and helped us build the first version of what is FUNDINGO today. And it was a system to help originate loans in a quick fashion and underwrite those loans and get them from loan application to funding. And through that, we got demand to also go further beyond the funding and have the servicing portion as well automated on the platform, because lenders were, hey, we need the full end to end, and that would be a huge value to us. Instead of once a deal funds, it goes into like a loan management software that collects the payments. So we built that out as well. In fact, we had some pioneer customers that agreed to, pay for it and pay for or fund towards it. And now the software is adopted to real estate and other use cases that are benefiting from it too. And it really is the focus of our business today. Over time, really, COVID was a big the next inflection point, where we said, okay, we're not going to have two business running in parallel, right? A consulting company and a product company, because they have very different KPIs. One is, billing for your time. The other is creating a software that has a ton of value and enterprise value, and you charge subscription revenue. Those are two very different KPIs, different business models. So we really decided that we're going to focus fully on the software side and have a repeatable value, repeatable business. And that's where we were able to pivot during COVID. And now we're fully a software company that has 180 customers every day managing their business through the operating system that we provide with FUNDINGO.
Okay. Yeah, that makes sense. Talk through the decision to build on top of Salesforce versus building a standalone product. It sounds like, you started in around 2013 time. And so with Salesforce's growth and their maturity and their ecosystem, really able to ride some of the coattails there. But other, call it software builders might be exploring today, does it make sense to build on top of an existing platform or to build a standalone tool? So maybe talk a bit about, in hindsight, what was that decision criteria? What were the benefits as well as the trade-offs, right? I think it's important to explore both. And then maybe today, talk about where you're kind of allocating resources. We can take it from there.
Absolutely. Okay. So the Salesforce, the choice of going on Salesforce is a big one. And it actually is a huge part of our growth. And I'll try to break it down as to why so that listeners could understand if they're evaluating how to go to market with a product, they could take hopefully some nuggets from here. So number one, Salesforce gave us trust, especially in a regulated financial institutions. When you talk about you're speaking to a new lending company that's evaluating a software and they hear you're built on Salesforce, that is instant trust that the software is reliable. The platform is futuristic with innovation. And it's also a name that everyone feels comfortable with. And it's a software that they know that if they are going to go out and recruit talent, the talent is going to enjoy working in their company because they'll be familiar with some version of Salesforce. So all of that is a big plus for buyers. Also, when it came to our product development, we're a lean team. We're not going to rebuild the core layers that Salesforce provides inherently in their platform. Security, compliance, the workflow tools. We really are able to focus our lean team's time on the lending layer. And that really gives us a huge edge and advantage, but also gives our customers so much more value for the price they're paying us because they're getting the inherent enterprise platform from Salesforce and they're getting the lending layer that Fundingo added on top of it. And then, when it comes to go to market, we have many customers are already live on Salesforce. So they're looking at it and say, oh, this is not a new system. This is a bolt-on on top of our platform we're already using. So it creates this single source of truth. We're not introducing a separate source of truth. And then the Salesforce team, very often when they're talking to their customers and they hear that their customers are looking for a lending layer, they'll introduce Fundingo. So we have both from the recognition, the product development, and the go-to-market. It's been a tremendous journey. Contrast that to building on our own platform. We'd have to really reinvent all of that ourselves.
That makes a lot of sense. Yeah, thank you for walking me through that. So now as you're thinking about product development, you talk about what are the true differentiators, what makes Fundingo, a killer app for your users. So talk about how you think about product adoption and what actually drives the value and measurable value for your customers, and how is that aligned to how you're orienting the company around, your North Star metric and the way people are building?
Yeah, absolutely. So I think one thing that's definitely happening in the industry and with software in general is the choice used to be which software is the right fit. Do we go with this software? Do we go with that software? Software really now is easy to come by. You have a lot of different software companies. You have options. You also have AI now that's making development even more accelerated. The difference between going with one direction or another direction, like going with Fundingo, comes down to adoption, comes down to value, realize the value after the implementation. And as you probably know, the statistics out there on what they call shelfware, software that you pay for and it's a failed implementation or it's only somewhat adopted, is so huge. So many companies experience that. So what Fundingo brings to the table for our customers is not just the software, but also the fact that our team is experienced in lending. We hire typically talent from the lending industry. We have the experience with our other customers that we could bring to the table. So we are really understanding what it takes for the software to be well adopted and add value on a day-to-day. So that implementation and that layer that we bring to the actual activation of the software is a huge piece of it. And then as they continue to use the software, we are in touch and close with our clients to make sure that we're continuing to evolve. So if they bring on a new loan product, if they are continuing to expand in other verticals, we're able to support to configure and customize the software to be well ready for those new loan products. And if you contrast that to many other rigid softwares or built by just software companies, but not really lending experts, what we find is lending companies often build out, they have this new product or new requirement, and they'll just spin off a new spreadsheet or buy a one-off tool for that very small edge case. Once that happens, you lose the whole battle, because now you get an audit and your information is in different places. You're trying to run a report for a customer, and you have to go into the spreadsheet to see what fees were added because they were not in the system. That's why our North Star is percentage of loans serviced on Fundingo without a workaround, because that tells us that we've succeeded in our mission.
Really interesting. Yeah, I think that's just to orient a company around, building all of these workflows within the product itself and being that customer centric as possible. That's really powerful. What are some of those conversations or perhaps like orange flags that your team knows to ask for to know that someone might be thinking about building a workaround? So you can flag that early to prevent them from going down this risky path. How do you flag that early?
Yeah, so honestly, it's a continuous focus, a continuous effort. It's really about staying close to the customer. And we've, about 2 years ago, one of our staff members said, I'm talking to customers and I'm realizing that they're doing things in spreadsheets because they didn't know they could be doing it in Fundingo. So when you're a software company and you're growing fast, you're typically more focused on your revenue, net new logos than you are understanding, are your customers really aware, your existing customers? Are they familiar and aware of how to adjust and adopt the system to the new changes in their industry and the new loan products that come out? So we realized that we needed to have a more heightened level of support and connection with our customers, so they're not putting things on spreadsheets or getting other systems as things come out. So we've rolled out managed services, we rolled out quarterly health checks and different customer success steps that are not, they're not so difficult to do. You just have to keep your ear on the customer and help guide them and make sure they're aware that they can do things inside the system. And really the managed services is probably the biggest piece to it, because they do pay for managed services because they're going to be paying for the time of the experts that will come back and help them adjust the system to meet the new requirement. But the customers report back that the value they get is 3x, 4x because of the fact that they're not leaving the system at the level of what they got after the initial implementation. They're continuing to evolve, and they see a much more, they drive a whole lot more value over time through the managed services that we offer. So that's been a big help and a big change since then.
Yeah, I like that. So let's switch gears a bit and talk about augmented lending, right? And how AI is playing into the business growth and how you're operationalizing AI within the product. So talk about the thesis behind augmented lending for a minute and what's leading you to write an entire book around it.
Yeah, it's a great question. And, I think what it is you have two camps. You have camps that say AI is not for lending. Lending is too regulated. You have to be 99%. You can't be 99% accurate. You need to be 100%. And the difference between 99 and 100% sometimes could be the difference between, are you going to go to jail for misrepresenting a number, right? Because your AI system decided to charge a client an extra fee that is incorrect and it's against the regulations. So the augmented lending is, we don't believe that lending becomes autonomous. We believe that with AI, it augments the humans. It doesn't keeps the humans in the loops and makes the humans faster, smarter, but doesn't take them and remove them from the loop. Because with lending, when you have AI sitting alongside the humans, you really have that relationship with your customer, the accuracy and the deterministic rules that need to go out, but also you're able to keep the team moving as fast as they need in a smart method, leveraging the judgment calls that AI could help the team make.
How do you have that conversation? Because I'd imagine there's a lot of education that goes into that, right? Oftentimes, people are using AI tooling right now for low stakes domains, right? Whether it's an SDR emails or marketing copy or content creation. Now, lending, as you mentioned, needs to be 100% accurate and correct because the stakes are much higher, talking about financial information. So how do you provide that education? And then what are those decision points where it's essential for a human to be in the loop? And then, what does AI do better than a human in these scenarios?
So great question. So one thing from looking at the full lending life cycle, there are so many steps that you don't need to put AI to take over the whole gamut. And there are steps that are higher and there are steps that are lower risk. So one of the areas that we're finding, and you mentioned it, is communication with the borrowers. Communication is key, right? Asking for information that's missing at the right time, being able to do that without any human intervention. There's no reason not to, right? If a customer uploads a document and it's the wrong document or a missing document, let that not delay the lending process. As we mentioned earlier, in lending, time could be everything if you're going to get that loan in time for the event. The other thing is reviewing and scrubbing documents. Lending still is document heavy. You need to get tax records, you get audited financials, bank statements, identity verifications. Historically, that's been done by a human underwriter that reviews those documents. Today, AI does a really fine job at scrubbing those documents, at least as an initial scrub, and giving you the points of here's what their financials show. It's showing their sales is trending upwards or downwards, or their tax returns don't match the name that's on the loan application. Or things like they uploaded a document, but it only has 1 month of bank statements. We need 3 months. Those are all the friction points in lending that makes lending historically be a very long process. As you probably know, and many have gotten, loans even for a residential home. It's a long back and forth process. So lending, remove that friction with the document scrubbing. It creates a much better communication layer. It doesn't have to be the one that's deciding whether a $1 million loan is approved or not. That, there's human in the loop for those judgment calls. But ultimately, there's a lot of friction in the process that we're starting to remove with AI. And if we educate the client that value, they see it quickly and we iterate and adopt in a smaller use case to larger use cases, and then it flows well.
Yeah, that makes a lot of sense. I think of things like predictive flagging, where there might be errors with certain fields, right, on document uploads. Things like reducing attorney costs for manual review, because now AI can provide legal summaries or document summaries and just reduce some of that high cost hourly rate work that you might pay an attorney to do. So yeah, it sounds like a lot of this kind of predictive flagging and reducing overall attorney costs are two interesting use cases that come to mind, while making sure that humans stay in the loop for those important points. Yeah, I like that. How are you, as we start to wrap it up here, Henry, how are you getting your message out into the market? You've got a clearly differentiated product. You are, building a very customer-centric company and a business. You're getting steady growth, it sounds like, from the referral base. How are you thinking about increasing your thought leadership and increasing your surface area ultimately for more people to discover you?
Great question. Yeah. So first of all, our goal is to become the household name for loan management in the alternative lending industry. There isn't a leader in the category, and historically it's been fragmented across many different tools that handle each use case differently. Fundingo being this concept of a platform that's configurable and is built on a trusted layer has become a real well-received approach for lenders that they didn't have that option in the past. So marching towards being the leader in the category, historically we've been getting our demand inbound, where people find us on our website, people find us on social media, and they reach out to Fundingo. And part of the reason why we haven't done an outbound, email marketing or using SDRs and different outbound methods is because we were really clarifying our ideal customer profile and seeing who's reaching out and how we're able to convert those into business. And frankly, we're a smaller team, so we're able to stay quite busy with that inbound demand. But as we look to grow, and now that we have more clarity on our ideal customer profile, we are going to be rolling out different campaigns that are going to do outbound outreach to the ideal customer profiles and be able to convert those into business. So that's been a shift, and we're looking at different avenues for that.
That's great to hear. Yeah, love to hear that. So as you know, some of our listeners, some of them are lenders, others are looking to connect with trusted experts as they look to get more capital within their businesses and just the smartest way to do that. So what is maybe a message you want to leave them with? And then also, where can they find you to learn more and perhaps have an initial conversation with you if they're interested?
Yeah, absolutely. So I think the message is, lenders from the trade shows we go to, the hundreds of lenders we speak to each year, our own customers, usually they don't have a capital problem. They have an efficiency problem as they grow. You have to grow headcount for every incremental amount of revenue and incremental amount of portfolio. In order to do that, you need to put the right controls, automation in place, and that's what Fundingo does. And really, we're hearing from amazing stories from our clients, how they're able to scale and fund more volume and increase capacity with the same headcount. Any lender out there that wants to talk more about it, and we'd love to discuss it. We'd love to discuss and show what we do. You can find us on fundingo.com or on our LinkedIn page, Fundingo's LinkedIn page, and we'd love to have a conversation.
Perfect. Well, Henry, thank you for sharing your insights on all things alternative lending, and looking forward to having you on part 2 once we have more growth and the book launches as well. Thank you so much.
Thanks for having me.